Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the Deal Quest podcast. Let's get started. Bob Bush is a senior investment executive with experience across industries, geographies, U.S., Europe, China, Middle East, Africa, as well as asset classes, venture capital, private equity, Islamic finance. He has engaged in various financial and operating special projects for solvent-related entities, family businesses, family offices, investment companies, corporations, and startups. Bob provides live television commentary and keynotes at global conferences on innovation, social impact, sustainability, global investing, and international trade. His unique experiences, love for learning and teaching, as well as an established network of relationships, fuel his interest in innovative business models, public and private partnerships, and entrepreneurship. Bob has international experiences with multinational corporations and government advisory, as well as his love for learning and teaching has given him a unique perspective on solving global challenges. Bob, welcome to the podcast.
Thank you, Corey. Thank you for having me.
I'm super excited. I mean, I know your background as an attorney doing deals. I love this conversation of the international stuff, of the public-private partnerships. We're going to get to the what you're focused on now in terms of the coffee. And there's so much experience that you bring and perspective that you bring to the deal space. But before we get to that, I want to take you back to when you were a little kid growing up, maybe 10, 12 years old. What did you want to be? Because I'm guessing an international deal maker and social entrepreneur and all that kind of stuff probably wasn't it back then, but you tell me.
International deal making and all of that, as ambitious as I was at 10 and 12, that wasn't on the radar. What I do recall, though, because I lived on the east side of the Mississippi River, born in a little town called Centerville, and then my parents moved to East St. Louis, Illinois. And on the west side of the Mississippi was St. Louis, Missouri. And I went to high school, wonderful Jesuit boys' school. So every day for 4 years, I would cross the river from the Illinois side to the Missouri side. I remember in my college applications, I called it a tale of two cities because going across that bridge, looking at this wonderful edifice, the arch, and in my rearview mirror, I'm living in a town, some really great people. I had a really loving and caring family, but it was a really different kind of city. The city of East St. Louis had peaked 30 years before that, maybe 20 years before that. And St. Louis was still sort of on the rise. And so literally, not just metaphorically, I was leaving sort of one place who unfortunately had seen better days. And that bridge really was a transformation for me as I would go to high school, and my friends were different on the west side of the Mississippi than my friends on the east side. The conversations were different. The vacations were different, right? What people did on the weekends were different. What they worried about was different. That journey recognized that the world was a much bigger place. And so it kind of started out going across the bridge, and then we started going across continents and going across oceans, right? But it was really that crossing the bridge that really gave me some insight that the world was bigger than my own neighborhood.
Wow. Just a follow-up on that, because you said you were ambitious when you were young. What did you think you were going to do at that time with that ambition?
My dad was a firefighter.
Yeah.
My mother worked for the city. And so public service in some form or fashion was just ingrained into what you do as a good corporate citizen, what you do in the family. How do we help our neighbors? My mother says almost my entire life, think of the other man. So I assumed it was going to be something in public service. And then once I got to high school, I started hearing, ideas about being a diplomat or maybe being president of the United States or something where I could, on a grander scale, still do public service. I quickly realized going to college and accumulating a little debt and whatnot, that being a diplomat is cool, but maybe I should make a little bit of money first.
I love it. So, one other question looking back, what was your first deal of any type? It could have been something early in your career or something when you were much younger, anything you consider a deal.
Well, there's deals and then there's deals. And
Right.
so the kid deal, right? The I was listening to one of your guests talk about selling stones to
Yeah.
the neighbor and whatnot.
Yeah.
That was a cute little anecdote. And the East St. Louis side is 90+% African American, right? And my high school was 90+% white male. And so in the early 80s, hip hop and rap was just starting to come. And so everyone's looking at me like, hey, Bush, what are they saying? I'm like, I don't know. So I bought Rapper's Delight, which was the seminal sort of touchstone for the era of hip hop.
Sure.
And I listened to it a bunch of times. I wrote out the notes. I gave it to my mom and said, Mom, can you type this up? She typed it up. She made 50 copies. A couple of days later, I go to school and I sell the lyrics to Rapper's Delight to my white brothers on the west side.
I love it. I love it. My wife is a hip hop baby. I'm a big music fan, but growing up as a white kid in Brooklyn, except for the stuff that crossed over, it wasn't so much. But in the 25 years I've been with my wife, I've gotten a huge education on the hip hop space because that was her world growing up. So you started out as an attorney, and I know you worked on some very big deals. I think it was the RJR Nabisco deal, right? Things like that early in your career. Yeah, talk to me about like that entry into professional deal making.
Sure. On that deal, I was on the banking side. I was not on the legal side. My first job out of college, I was a paralegal at a fancy firm, Davis Polk and Wardwell. They're still around. They're considered
Sure.
one of the preeminent law firms in the world in New York City. And very quickly saw that, gosh, we were just killing it on, all the hours and stuff on the legal side. And I wanted to be closer to the deal and closer to the money, perhaps, but just at least wanted to see the whole transaction. So I moved over to become a financial analyst. The idea was, Bob, you don't know anything about finance, right? I was a philosophy major in college. We're the masters of the universe. This is New York City, baby. Like, we like you. You're an affable kid. You're coachable. We're going to put you in sales. And I said, I don't want to go in sales. I want to do M&A. That's where the big dogs are hunting. I want to be part of that. And they're like, well, you're going to be eaten alive. You haven't read the spreadsheets, all that stuff. I said, well, I was a good student. I'm a quick learner. I'm a hard worker. Give me a shot. And if I fail, I fail. And so I started my career doing mergers and acquisitions. I slept in the office many times. People didn't know that. I pretended that because I had a lot to do, I had a lot to catch up with, but I'm competitive and it was interesting to me. And I wanted to understand this new language from these spreadsheets and these 10Qs and these 10Ks and S1s and taking all that stuff. And I really embraced it and I really enjoyed it. To me, it was just a new language, cracking the code, using numbers and not alphabet and letters from dead languages, right?
Yeah.
And so, yeah, I ended up, I don't know if they were trying to bully me or haze me or whatever, but I ended up on the RJR Nabisco deal. And I remember working on the model and grinding away. And I remember going, oh, hey, great. I got control of this. So I go to my boss and I say, this deal doesn't work. They said, what do you mean? I said, the debt never gets paid down. And they're like, they looked at the model and they're like, yeah, your analysis is right. I said, well, we can't do the deal. And it was one of those, listen here, Padawan, grasshopper, it doesn't matter.
Right.
We are in the debt given business. We're just going to roll it over. And what you fail to put in your model is something called a PIK, payment in kind. It never gets paid off. We
Right.
make our money. We just continue to roll the debt. And I said, but the equity guys aren't going to make anything in this deal. Padawan, we know, but again, this is how the game goes. So I very quickly understood some basic tenets of financial engineering, what makes deals work, the capital table, all of these sorts of things, the cost of capital, to help me really sort of refine my thinking around what deals at a certain level are, the kinds of deals I wanted to do. And it was a wonderful experience, but they threw me into the deep end and I was very appreciative. And I used my legal and my financial to craft all kinds of entrepreneurial deals all over the world because of the good fundamental training I got very early on in my career.
It's funny that there's a lot of similarities in that. I was a little middle class kid from Brooklyn. I didn't grow up with any of this stuff either. I didn't know anybody in finance or law, whatever. My dad was the first in my family to go to college, and he did it 12 or 14 years at night. My mother went back to nursing school. So, in terms of graduate degree, I was the first one in the family. And yes, I was the same thing. It was all Greek to me, all new to me. At least I didn't even have the language background. And I won't go into this. I've told this story before, but I mean, I remember a couple of years again, we were doing some of the early mortgage-backed securities deals, and these agreements had 40 pages of defined terms, 160, 100, 200 pages, and I just made them. I was like you. I'd sleep. A couple of the partners had couches in their office, and when they were gone, I'd sleep on their couches, and I was just determined to figure out these deals. And I came back similarly, and I said, "This agreement doesn't work," and learned some things. But there were a couple of places where the deals were so new at that time. And, I remember like even the partner I worked for didn't understand. Like I realized he didn't understand the deal. So complex. So I won't go too far down that rabbit hole. I've told the story before, but I identify with that drive to sort of, figure out the new language and understand these things. So it's great. So yeah, talk about the evolution from there, because we've sort of teased that something about a coffee company and international and sovereign wealth funds and things like that. So keep us going on the journey. Tell us how you got into doing some of those kind of things.
Well, I think the thread through all of it, Corey, is curiosity. You've got to just it's nice when it's innate, and it's nice when you're put in unfamiliar environments where you either, I don't always recommend sort of a sink or swim kind of thing. I think it's nice when you can have a nice progression. And I've had that, and I've had the sink or swim kind of moments, and I'm grateful for both of them. But the commonality or the thread through my entire career has been a thirst for learning and a curiosity and pushing my own knowledge of what is possible. And that's in turn allowed me to have some really sort of wonderful experiences. I think one of the experiences I had, so after, right out of college, going to Wall Street to do M&A, I then went to graduate school. But before going to graduate school, I was traveling in the Middle East. I went to Dubai and Abu Dhabi to visit my college roommate's family. And while in Dubai, I walked into a hotel, and this is in 1989, 1990. Everyone sees Dubai and Abu Dhabi, these grand skyscrapers and whatnot. That wasn't there. You had one or two towers there, particularly in Dubai. And it was even less advanced in Abu Dhabi. And so I go into the hotel, and there's a tent in the middle of the hotel, right? And I, again, being curious, I stick my head in the tent, right? And I see some older gentlemen, they're talking and whatnot in there. And I walk in and I say, just say hi. And they look at each other. And one says, hello, what do you want? And I said, I'm a tourist and I was curious, what's this tent doing in the middle of the hotel lobby? And it started a conversation. And it was a wonderful conversation. It was a seminal conversation because the gentleman told me he must have been maybe in his 60s. First, he said, why are you here on vacation? Like, because Dubai in the late 80s was not a vacation spot.
It wasn't. Yeah.
And then he said, well, what are you going to do, et cetera? I said, well, I'm going to go to graduate school. I'm applying to business school. And he said something very curious to me. He says, listen, we don't need you here. And I said, what do you mean? He said, we're sending our own kids to these fancy business schools. So if you want to do business with me, learn my culture, learn my language.
Yes.
And he touched his head and he touched his heart. That's interesting for us. But we've got smart kids. We can do all of that ourselves. And instead of applying to get an MBA, I went to Johns Hopkins SAIS, School of Advanced International Studies, and studied Arabic in the Middle East and Africa, and international relations and international economics, because a man whose name I will not ever remember, whose face I would never recognize, who's probably long past, gave me some insight that has informed my thinking for the rest of my career, which is understand the people behind the deal, the people behind the economics, et cetera. It's going to give you insights. It's going to give you familiarities. It's going to make you a better deal maker. It's going to make you more insightful, et cetera. And so I ended up going to study international relations and economics. That led to me being invited to become a term member on the Council of Foreign Relations. So then I'm sitting in these really august meetings with whether Henry Kissinger and the vice president and teachers that were working with the president at the time, because then we had the Gulf War that happened, as you know, in the early 90s. And it just really, again, broadened my perspective on how big the world really is and helped me start thinking about the kinds of problems I wanted to solve. I knew, because I enjoyed finance, I enjoyed structures, I knew also then that there were some international opportunities. The emerging markets was opening. Back in the early 90s, you may recall, it was all about Eastern Europe.
Yeah, yeah.
And so a chance meeting of a guy named Jim Rogers, right? I'm at a party. Jim Rogers was the co-founder with George Soros of the Quantum Fund. And I'm at this dinner party and Jim says, "What are you going to do?" And I said, "Well, I'm probably going to go to Eastern Europe because there's a lot of privatization work going on in Poland." And he says, "Well, why don't you go to Africa?" And I said, "Go to Africa because I'm Black? Like, I don't know Africa." Right? The privatization in Eastern Europe was the big thing. And he says, "No, that's the new frontier." So make a long story short, I ended up getting a fellowship to travel through Africa. And I shifted my focus from just sort of academically understanding the Middle East and Africa to really starting to do deals and look for ways to create opportunities, because there was a lot of opportunity and the risk was not calibrated appropriately, because we tend to assess more risk because of our lack of knowledge, but because of our knowledge. And the more I got to understand the culture, the economies, et cetera, I realized that there was a asymmetry here. And there were actually better deals to be done, better opportunities to be done than many would recognize. And therein is an edge.
So what was some of those types of deals? I mean, I was doing some international stuff back then, not in Africa. My experience in the 90s in Africa was much more on the nonprofit side, traveling to Ghana and Uganda with the Hunger Project. So yeah, tell me about what was going on at that time.
Well, so back then, you had a lot of World Bank and IFC, those kinds of large infrastructure plays going on, because all of that needed to be there because the private sector guys don't want to come in for the most part. They're not the first to come in, right? They want to see a lot
Right.
more risk mitigation. What's the rule of law and those sorts of things. So my interest at that time were around those sort of fundamental things. What kinds of rules of law need to be in place? When I landed in Africa from my SAIS fellowship, I went to Ghana and I went to Accra because President Rawlings had just started a stock exchange. And I knew that capital markets development and formation was going to be a key to assessing capital
Yes.
and allowing companies and entrepreneurs that were doing good things in the country to access that capital. And so I landed in Accra, spent a lot of time watching literally like the buttonwood tree approach to New York Stock Exchange, what was happening in Accra. And I started visiting exchanges throughout Africa to see how that capital formation was happening, to see what kinds of companies were being listed. Investment banks were just being formed, laws and regulations and all those sorts of things were just being created. So that was the time to learn how to do that and the importance of those elements.
Wow. I love that. Listen, I think to this day, for most people, they don't, I mean, there's such a lack of understanding of, well, a lot of places, but certainly, even to this day with Africa, right? And also the fact that Africa's a continent. I mean, people talk about it, unfortunately, like it's, one thing, right?
That is part of the insight when you're in the ground. When you start to get a much more granular view of things, you start noticing distinctions, right? From a certain lens, everything sort of looks the same, right? But there's a peculiar assessment of Africa that has been there for many, 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 many decades, many, many centuries. And that is sort of viewing Africa as a place to extract wealth.
Sure.
And so a lot of the wealth creation was mining the minerals, the commodities out of the country, And so there's been that understanding for thousands of years, in fact. And I saw that when I first landed there in the early 90s. Even to this day, a lot of the value added is still done outside of the continent, including with coffee and tea and other commodities that's there. So we've had in the West particularly, a very, very narrow understanding of Africa. And at the end of the day, Africans are going to have to create their own value added in the ways to create that value added. And they're doing that, in fact. And there is more capital that's being identified and brought in to create these opportunities. So that understanding is definitely broadening, but for sure, there's a long way to go. The second observation, generally speaking about Africa, though, is it's not really that different than some other continents and other places in the world. If you look at the rate of growth in Europe, you see in Europe, London and UK, and you got the industrialization in Germany. And then you saw for many, many decades what was happening in the Balkans and what was happening in Eastern Europe. So you had two, maybe three rates of growth in Europe as well. So it's actually not that anomalistic that the continent of Africa would also have varying rates of growth.
Sure.
The difference between the European case, and there are some standout countries, for example, with Germany, is that Germany created an industrial base.
Right.
So the value added could be within the country, and then they could export their expertise and their innovation to the rest of the world. That did not happen. That industrialization in Africa did not happen. And when you are relying on, I'm going to bash my own lawyer friends and diplomats, et cetera. When a continent or a country only creates poli-sci grads and lawyers, you're going to get a lot of debate and not enough stuff being made. And that's one of the issues that needs to be better addressed in Africa. But the varying rates of growth, you see that in the United States, right?
Sure.
Mississippi doesn't look like Silicon Valley. There's a reason for that. And so I think we have to be very circumspect in both the opportunities and the assessment of Africa. It is not that unlike many other places globally.
Yeah. And one of the things I learned spending time there was, just plays into this whole thing is the colonial history, obviously. And that's not the only place where that applies. But, one of the things we learned when we were in villages in Ghana and Uganda was the fact that the best land was taken for cash crops, like you said, where basically the money was going out. They were owned by foreign companies and that money was going out of the country. And then the women were left to do sustenance farming on the land that was not great and walking to get water and things like that. And that colonial history still is institutionalized into a lot of structures in various countries in Africa these days. So yeah, I mean, when you have not only resources like actual minerals and things like that, but you also have cash, being pulled out of the country on the agriculture side, it all plays into that. So a lot of times when people think of deal makers and people in finance and people doing international deals, right, they hold that in a category that's separate and apart from people who want to make impact and have a socially conscious, view of things. Haven't believed that. And in fact, my wife and I have long ago come to believe that that's some of the most powerful opportunities that are not available in the NGO, or nonprofit world because of the limitations, that inherent in those, which I won't get into. So I'd love you to talk about how you got to what you're doing now and, maybe follow that thread through from where you started us in terms of what your mother instilled in you, your parents instilled in you.
It's having studied economics and really try to be very pragmatic about things. In the West, particularly, but in the United States, we follow a certain type of capitalism. And that capitalism is rooted in the notion of shareholder primacy. As a lawyer, you may recall the Dodge v. Ford case in 1919. And that was a case in which the minority shareholders sued because they were not getting a dividend because the companies were deciding to reinvest and the minority shareholders had to go along with the majority, and the majority at this time wasn't actually trying to take out dividends. They were trying to grow the business, right? And the court came up with this notion that the shareholders take primacy over employees, over And it basically is the majority shareholders rule, and that's the primary voice. And then later you came Friedman in 70s, and then you had the rise in the practice with the Chicago School and law and economics. I'm dating myself, but you've got a little bit gray hair like I do. So you had the law and economics school. So you had the deregulation and the corporate raiders, and I got a chance to be a bit part of that with the LBO stuff that I got a chance to do. So it's very much ingrained in our view of capitalism that the shareholder has primacy.
Yes.
And when I'm then sort of trying to figure out this question of financial responsibility and social impact, there is this gravity that keeps pulling back on any business or model that says, and by the way, some very smart people, smarter than me, have made this point. Warren Buffett has basically said his job is to make the best decisions he can with the capital and return that capital to his investors. Now, what he does with his money after that, right, with the giving pledge and how he makes impact is separate from that. Right. So he's pretty clear that he doesn't try to mix this very challenging role of social impact with financial returns, because it's very difficult to do. And so as I'm then trying to figure out, well, how do we start making the logic as compelling from a shareholder primacy to a stakeholder primacy, or at least bring a little bit more balance, there's not a lot of really good models out there for it. And so we've seen fits and starts with ESG, right? First, it kind of started with corporate social responsibility. Then it became ESG. And some of the largest firms in the world started raising capital with funds, et cetera. All of that is sort of dried up because it appears the numbers don't support the premium on thinking long term. So you got the short-termism, and you got the shareholder privacy, and you got the fact that the average life of a CEO is less than 10 years now, which is half of what it was 30 years ago. So there's this, no one has the time, Bob, to figure out what's going to happen over the next 10, 15, 20, 25 years. This is quarter by quarter. If it's public, people are watching my stock day by day, right? So that's the ethos. And so then when we get to your question around striking a balance and creating social impact, it is almost impossible, given that ethos, to do it well and at scale. But it's a problem to be solved, and we have grit, and we're trying to do it in our own way. And so I remember decades ago traveling through Africa. Even today, Africa is 70+% agrarian, agricultural based, et cetera. How are we going to then try to figure out how to deal with issues like with our farmers, or with this agrarian agricultural base still, of giving the kind of returns that's going to be required to attract the capital and still bring up these people, bring up these farmers, bring up these villages, et cetera. So I moved to Dubai in the early 2000s. Dubai had the benefit of a very small country and a very limited number of locals that were in that. Dubai is not a country, Dubai is an emirate. The UAE is the country, Dubai is one of the emirates. And the country is a very small country. And I was attracted to go there because what they were trying to do, and you may be familiar with the winner's curse, right? You've got companies or countries that have these windfalls, but because of how they received the money, they didn't have the right infrastructure, they didn't have the right policies and processes in place. It's like winning a lottery, and then you find out a generation or two, they're back to where they were. They didn't use that as a stepping stone to sustainable economic development. And so when I got the opportunity to work for the Prime Minister's office, His Highness Sheikh Mohammed bin Rashid, Sultan bin Sulayem, Ahmed bin Sulayem, and these guys, and we're looking at how are we going to take a little bit of oil that we've got. And Dubai, people think it's oil rich. It's not. Abu Dhabi has the majority of the oil, but it gets a little bit. But it did have certain endowments. It did have certain factors. And so the key question is, how do we not squander, and how do we build from the wealth that we have to protect our own people and grow our own economy? And it was a fascinating time for me to be there. I went there in the early 2000s. And so this notion of social impact from the Dubai perspective was really just to make sure that the generations of Emiratis were better off than the previous ones. And the previous ones, because it was a low base for Bedouin, they could demonstrably show The question was, how fast would that pace be? And it was remarkably fast because of the kinds of investments they made, because myself and others that they brought in to lend perspectives on this stuff. So it was a fascinating time. So that's the form of social impact. When you create an economic development engine that looks after your own people, then it becomes a beacon for other countries and other nationalities to believe that they too can have capital mobility.
So let's keep going, because I want to talk about what you're doing now and how you got there. Where this thread has led you on what you're focusing on most.
As with most threads, Corey, you keep pulling the thread, there's just more and more to it.
Exactly.
Happy to talk a bit more about Mutombo coffee. So I had the pleasure of meeting Dikembe when I was a teenager, as was he. He went to Georgetown with my little sister. And I was coming to visit her as the big brother, but I was excited to go watch some Georgetown basketball. And Alonzo Mourning was there, and Patrick Ewing had played there. And then subsequent to that, Allen Iverson was there. So Georgetown was this basketball juggernaut. I'm blessed with 5'8.5". So basketball was not in my future. These guys were trees, right? And so they were good guys, they were funny guys. I got to look in on my sister, and I got to watch these world-class athletes grow into themselves, grow into their bodies, and then subsequently become some of the basketball players in history. So I had a long-term relationship with Mr. Mutombo. He went on to have a Hall of Fame career. I went on, as we've sort of talked about a little bit today, to move to these different countries and have these different experiences. And so 5+ years ago, I was in Dubai working for the government of Dubai, and he was in town as an ambassador to the Special Olympics. And we just started talking about Africa and what he was doing. He had a foundation. He had built a hospital that he had named after his mother. He was building schools, etc. And I said, I've been thinking about this issue of social impact. Why don't we create a social enterprise? I call it a social enterprise 2.0, which would allow me to do some of the things using my model that you want to do, which is to support the Congolese and the women in the Congo. Well, what is it? What value can they create? What's a product that the world would want? And coffee is one of them. Africa is the birthplace of coffee. And most people don't know that. Everyone's heard of Italian coffee, but the Italians don't grow coffee beans. The coffee came from Africa for hundreds of years, and then also from Asia, and then from Latin America subsequent to that. The value added, the roasting, was Italian, but the beans were somewhere else. People don't know the little Swiss miss, right? The cocoa beans, that the Swiss don't grow cocoa beans. That they were, for hundreds of years, they were getting the cocoa from Ghana and the Ivory Coast. So going back to what the previous point, the continent has all these wonderful resources and commodities and whatnot. And I wanted to take my theories, take my money, take my time, and build a model where we could create a bridge of financial sustainability, economic sustainability, to the kinds of people that he wanted to support, that I thought I had a model that could sort of create that flywheel. So that's how we formed Mutombo Coffee. Unfortunately, he passed last year, so he's not going to see the next chapter of that business. But we spent the first couple of years working on IT and infrastructure and building relationships with the farmers and creating the supply chains and the value chains. And so now we've launched the brand, and we're selling coffee all over the world and in the United States. And we've got some great clients, and we've got partnerships with the Houston Rockets now. We've got a partnership with universities. We're selling stroopwafels and coffee to the military. We've got all these wonderful corporate partners that are starting to come on board with us, because my mantra is, Corey, it's commerce and not charity.
Yes.
We're looking for ways to create sustainability from the value that you create. And it's up to us to help you find those bridges, those opportunities for trade, help you get it financed, help you with the quality control. But it's a monumental task, because you've got to be careful when you make a promise, right? This was in 2020. 6 months or so after we started the business, COVID. We wanted to sell coffee in arenas and sports arenas all over the United States. There's nobody going to any game. Then unfortunately, he got cancer. So now my ambassador, my co-founder, can't do what he does, which is to bring attention to it. And now we've got tariffs and price spikes and droughts and pests. So we are super resilient. And going back to the to the main objective of deals, in a way, frankly, putting this deal together, putting this business together, with given the previous years, has been a blessing to us because we had to build the business resiliency, and I call them sort of shock absorbers to deal with all of these issues. We didn't have the luxury of coming into a rising market with all these great things. And it's making us a stronger company. And we are now about to hit our stride. We're excited about that. And we've got a lot of friends, and we're moving from B2B to direct to consumer this fall. And so we're very excited about it. And at the end of the day, we think we'll be able to buy a lot of coffee from our farmers and get the coffee in coffee shops and corporations and arenas and households all over the United States. And one of the things that we hope that our coffee does, unlike any others, is I like to say our coffee's great, but it's the conversation between the sips, right? We want our coffee to help catalyze conversations like this, to create community, to be creative. That's the space that we want to live in, which will allow us to meet our mission to support social impact at origin, but community impact at the destination of where our coffee's served.
I love that vision. My wife and I came to the conclusion many, many years ago. We had our own nonprofit for some years that did young women's empowerment work and race relations work. And we studied, we knew a lot of people in the nonprofit model. And not that there aren't appropriate situations and good nonprofits, but in general, that model is underfunded, overworked, cycled out every couple of years by foundations. It's just, and nobody remembers this, but in the early days, they were calling it the fourth sector, right? Because you had for-profit, nonprofit, and government. So the fourth sector was, now it's become socially, a type B corps or socially conscious companies or conscious capitalism. There's all these, variations around it. But the concept, and even my wife's, value prop for her business is stay true, get paid, do good. Like we really believe that you can stay true to who you are and your values, that you can actually get paid as a sustainable business model portion of it and have a positive impact. And those things aren't mutually exclusive. And now there are legal structures that conversation you had about, shareholder right primacy. There was a point at which, from a legal point of view, you really had risk and trouble, right? Like social impact was not something you could take into account unless you could show directly how it would end up coming to the bottom line. So now there are at least legal structures in the U.S., at least, the places that allow for some of these models. But, on a bigger level, I truly believe in this model, and I believe that it's possible. So I'd love you to expand a little bit more. Like, so who are you working with? Where? How does that benefit them? I mean, I assume there are a lot of times when resources have been purchased from local people or taken from local people, but the dealings have not been very fair, right, in the past. So tell us a little bit more about the model all the way along the way, because I love the way you said at source of origin, and then having those conversations, the impact that at the other end, people are drinking the coffee. Give us a little more depth on that.
So one of the keys from the architecture of the deal, there's a lot of intermediation in the supply chain and in the value chain. And so every time another company or hand has to get involved, that's another cut. If you look at the cost of a coffee at, I won't mention any competition, but let's call them P-bucks, that $5 cup of coffee, about 5 cents, 6 cents of that is actually what went to the farmer.
Yes.
Everybody else has put their cut and their margin on that. And legitimately so. There's a lot where you've got rent, you've got transportation, you've got logistics, you've got the roasting, you've got the bagging, you've got the marketing. So there are legitimate costs in any supply chain or value chain. Absolutely. Why would this be any different? So part of, as we try to decouple some of this, is can we create more direct trade opportunities with farmers so we don't have to, and that's a challenge because you're looking at centuries old models where the dependency is baked into the structure. And so often when we're talking to the farmers, they have not relied on their own export expertise, pricing expertise, logistics expertise. Yeah. So as we're trying to First, we're just trying to find good beans of high quality and make sure that it's reliable supply, et cetera. So as we started to unpack this, we realized, as with any good deal or any good team, we're going to need support. And when we launched the business, when the whole world shut down, I had to rely on those NGOs in the market. I had so many meetings with the ministries of agriculture and NGOs in these countries, giving me advice, giving us perspective, helping us understand what the infrastructure was like, where the challenges were for the possibility to truly disintermediate.
Yes.
And it was much more challenging than I thought it should be. We've made some inroads there, but we are far, far away from having it as frictionless and as seamless as it ought to be. So that's one thing, is just, are there opportunities for disintermediation? And the answer is yes. Some of it obviously has to start at the farm, in the cooperative. The tax structures in these countries, are there incentives, right? For farms, how does the co-op board work? How does the ministry work? So we've been in conversations trying to help provide a perspective on that in the meetings that we've had in different countries. And fortunately, because of my experience in Dubai, where I actually was an advisor to help create the coffee center there, we helped expand the tea center, diamonds and gold. That was part of my remit. So I understand enough about these value chains and challenges, et cetera. So I'm bringing, the good thing about this opportunity is I'm bringing my legal mind, I'm bringing my economic mind, I'm bringing my finance mind, I'm bringing my mom's mind, all into trying to come up with, how do we solve this problem? How do we crack this code in a way that ultimately benefits these women and these people at origin? But it's a work in progress. And the goalposts continuously move, right? So now tariffs is an issue. There's something called the Farm Belt I was kind of alluding to. The US doesn't really grow any coffee. 99.99% of its coffee comes from someplace else. At the moment, Brazil has a 50% tariff, and it's major exporter of coffee into the United States.
Yes.
Countries in Africa also have tariffs on them. So the administration has a perspective on why it's doing what it's doing. I understand some of it, of course, for leverage and for a bigger picture and all of that. And the reality is, as an entrepreneur, we have to work within these structures and we have to be creative. I'm not the president. The president has a view about what he's doing and why he's doing it. And ultimately, I think any entrepreneur cannot rely on the president or the governor or the mayor. They have to take the landscape as it is. And one of the things, as you know from your own experience in Africa, that's not unusual, having to be creative when you've got uncertainty of law, et cetera. So it's more challenging when you think coming out of the US, you don't have to deal with it. But this is the reality for decades in these countries. And so I'm not intimidated by it. We would like to catch a break every once in a while, and sometimes we do, and sometimes we don't. But getting back to this architecture of how to expand and where the value is. So part of that is just this notion of disintermediation.
Yes.
The other bit that we've done is to reframe the conversation. Coffee does not have to be a commodity.
Yes.
And so I remember having a conversation. I was giving a talk to the auto industry in Detroit a year plus ago. And the feedback I got was really spot on. They said, Bob, we love what you're doing and how you're trying to help, but your mission is not my mission. So here's a bit of advice to your listeners who are entrepreneurs or business owners. If you can't solve the problem of the customer you're trying to win their business, he doesn't care about your problem. He wants to know if you can solve his problem. And so what we realized, that having good coffee wasn't enough. What we realized is, how do we make this coffee relevant to the culture in these corporations, for example?
Yes.
So what's happening, as you may recall, with the world shutting down, people didn't want to go to the office. And if they come back to the office, I'm like, Mr. CEO, the last thing they want to do is to have some yucky coffee or some sucky coffee, right? Let's create coffee talks. Let's create coffee breaks. When you give a conversation, whether it's virtual or not, people are at home, send them some coffee. So we started doing these coffee talks and facilitations virtually, so that when you got on a call, everyone was drinking from a Mutombo coffee cup, having Mutombo coffee with the corporate VP, it created a sense of camaraderie. So we started framing the conversation to make it relevant to the client and the challenges they were having with employee morale or employee resource groups that were having events, et cetera. And that started to resonate because we can do what we want with the money. We can solve our own mission, but we still need to get that flywheel going. And so that's sort of the second observation with regards to know the need of the client and align your narrative, your value to what is important to them. And that has actually been very, very helpful to us as we have started to expand new clients. And that's why we've been able to get universities and professional teams and professional athletes to join us because they know at root, we're trying to make a difference, but we're not sacrificing quality. We recognize that we're in a competitive landscape and we truly have unique and differentiating ways that we can connect to our clients.
Love it. So, Bob, obviously, it's an adventure like this. You talk about the disruption and disrupting the supply chain and things like that. And this is not a tech venture, right? Where maybe disruption, it's a lot harder to disrupt a supply chain, right? than maybe it is on tech. So, I guess, with that and everything that's going to take, and obviously there's distribution and you're selling around the world and all this stuff. I'm sure there's capital that's necessary. So, how have you funded to date, and what is your funding plan on this business going forward?
Thank you for that question. And as you know, you can always put money to good use, right? So, and because we are tackling a pretty big problem, I think the first capital source should always be sales, should always be revenue. If you can figure out a way to bootstrap or to get going and find out people that want your product, do that. That's sort of the easiest answer. So, unpacking that a little bit, there are different forms of capital. There's the financial capital, there's the social capital, there's relational capital, there's intellectual capital. And in my humble view, before you start getting financial capital, asking people for their money, get your intellectual capital stacked up. Make sure you've got a good team. Make sure you know the competitive landscape. Make sure you understand the business, the rules of the game, what your value proposition is. That's all intellectual capital.
Yeah.
You create that intellectual capital. Fortunately, we live in a society where there is a lot of financial capital around. That financial capital at some point will find you because they know that you're handling your business. So start with the intellectual capital. Social capital, one of the benefits of being almost 60 is that I've got a lot of friends and they have a lot of friends and they find out that this company, Mutombo Coffee, is trying to tackle this big issue and they're chugging along and they're making a little traction. They've got a little bit of revenue and their product tastes good and they're thoughtful about it, et cetera. And so that our social networks are starting to ask, hey, you guys have been around. Didn't look like COVID killed you. Didn't look like tariffs haven't sort of knocked you out, right? You are continue to chug along. How can we help? That social capital is starting to kick in. And it's really wonderful to see when people are asking, hey, we are a corporation or I'm a celebrity, we're doing an event, why don't you provide the coffee at our golf tournament? Hey, we're a university, can you give a talk about the anatomy of starting a local global business? What is that like? It's so interesting. So we're doing coffee talks and coffee breaks, et cetera. So that's sort of that social capital, relational capital. But at the end of the day, obviously, you need hard cash and hard dollars to do that. And that's where we are. We are going to be launching a small raise. We're doing a couple of things. When I go to church and I talk to the church lady, the deacon, and they go, Bob, we got your coffee. We love it. We love what you're trying to do. How can I help? And I said, the first thing to do is buy the product. And so now we're going back and saying, hey, we're onto something. We're going to be creating, God willing, a very substantial coffee business over the next decade. Most of these women in this church, most of these men in this church have never invested in the stock market. Let's give them an opportunity. Let's give our consumers an opportunity. Let's give some of these people my barber has said, Bob, when are you going to let me into your deal? I see what you're doing. So we got the barbers and we've got the truck drivers and we got the postmen and we've got the U.S. soldiers. I've visited about 12 bases in the last year, and I've got a list of soldiers say, hey, man, when you're raising money, let us know. We want to put a little bit in. We want to be in the ground floor with this. We see it, and it's exciting, and you're contagious, and we don't just want to have the coffee. How can we participate in your growth more directly? And these checks are probably not going to be large, $500 here or $1,000 there, et cetera. And so we're doing that because in keeping with our true mission of trying to figure out throughout our entire supply and value chain, where can we create value? I quickly realized that there's an opportunity to bring people who never have had the opportunity to participate in a story like this, and they're eager to do so. So we are going to do crowdfunding raise soon that will allow my deacons and my barbers to participate. And then shortly thereafter, we'll be doing a Series A that'll let some of the more institutional guys take a bigger piece.
Love it. Love it. So obviously, we're both lawyers. This is not an offering on the securities laws, but people want to find out more. Where should people just, about the coffee in general as a consumer, or they are interested in being advised when you are opening up the crowdfunding? Where do they go?
Mutombocoffee.com, Mutombo coffee.com. We'll be putting out a notice, we think, in about 30 days. We sort of want to get the November Thanksgiving crowd, the Give Thanks crowd. We think that you'll be hearing some murmurings about that within the next few weeks. And I think before we got on this interview, love the sort of stuff that your wife is doing, because I'm creating a YouTube channel for kindred spirits, for people who, just like you, recognize, and I love what you said, right? You said, stay true, get paid, do good. Love it. And so we'll be launching a YouTube channel and doing some stuff around social media, around identifying city by city, neighborhood by neighborhood, people who are doing, or who local heroes that are doing good, bridging the financial impact with the social impact. And I want to amplify them. I want to celebrate them. And I want them to continue to do what they're doing while drinking our coffee.
Love it. My final question on the podcast is always about my highest value in life, which is freedom. And for me, that means everything from freedom around the world for people from oppression to why I've been an entrepreneur for decades and I've been out a boss. What does freedom mean to you, and how does it impact your life and business?
Wow. It's a wonderful question. In fact, thank you for asking it. I think for me, right, and to kind of keep this short, because, man, we could really talk about this because it's a really deep question. The simple answer is freedom for me is alignment. We don't tout it much, but we're faith-based. We don't tout it much, but it is very important when I'm making decisions, when my team is making decisions. What I mean by alignment is I want to know when I'm praying that at the end of the day, I'm glorifying God. I want to know that I'm aligned spiritually, intellectually, with my heart and the use of my hands. And if I can get that alignment, even when there are difficulties, even when there are storms and challenges, I will be okay, because I know I'm part of something. I'm part of a flow. I'm part of a higher power, a higher calling. And that is what freedom is. It's not without challenge, great comfort. It is despite what's going on around you, not in some stoic way like it doesn't matter, but in a very present, meaningful way that I know by God's grace and a little bit of grit, everything's going to be okay. And that's freedom to me.
Love that answer. Love this entire interview. I know, listeners, we went longer than usual, but my listeners know that I trust the flow, and the episodes vary. And this was one where more time was called for. And Bob, from the minute you and I met and had our initial contact, I just loved your energy. I love what you're committed to and what you're up to and the difference that you're making in the world. And I appreciate having you on as a guest on the Deal Quest podcast.
I'm humbled by the invitation, Corey. Thank you very much.
Thank you for joining me on this episode of Deal Quest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to cupforlaw.com. That's cupforlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your deal quest will bring.